Today we had continued sell-off in the S&P 500, and we are seeing this cross of the 22, the 55, and 100. Tonight is going to be packed with levels. There are parts of this that you're probably going to want to watch again. Let's jump right into it. To start with, we just want to point out the obvious. This was consistent all day long, 45-degree angle selling. When you see 45-degree angle selling, you know exactly what it is. It's just programmed selling. So when you see it, just know that's probably CTAs or some other kind of algorithm or high-frequency trader. And what they're saying is just sell X amount every single hour or every single half hour, whatever it is. And so what you do is you get these channels, and they're pretty easy to see. And that's all they're doing. They're just get me out, get me out. And it literally started from 9:30 on. You have the little gap, tries to rally, and that becomes your high trend line. And then from there, it's just on, and you just form that channel all day until later in the day. Then you start playing the games. As always, 2:30, 3 o'clock, the last hour of the day. Why I'm showing you this is orderly. This is not panic. And it's very clear that it's not panic, and that is the concerning thing about this when you say it, just FYI. But same thing here, a little panic, go from there. How about the VIX? What happened with the VIX today? We talked about this. You really want a 30 handle. You got to that 29.5. Is that there? Is that enough? I'm not sure. There's one way to look at this that could help us. Now would be a good time for me to remind everybody just to hit the subscribe button, click all notifications. All these videos are linked. 27.5% of you that watch them actually are not subscribed. Also, they come out at different times because unlike a lot of people, I actually do trade the stock market. So I cannot just get these out at the same time every single day. Therefore, you probably want to click all notifications if you're following along during the week, which especially now, I suggest that you consider doing. If you see what's going on here right now, what I want to look at is the VIX divided by VXX. And what we're doing is we're taking short and we're seeing, are we seeing those spikes? The bottom line is we're not. So when I look at something like this and where you are in December VIX spike reverses the short VIX, the shorter term VIX, look what's going on here. You're actually at a better level. So when I go here and just look at the VIX in and of itself, and just remember where you are here and you remember how off this is. Actually, let's do it this way because then we can compare things. It'll just be easier. And again, we're just going to have to do this unedited today. I'm not going to have the time. What are you seeing here? You're seeing that this is way more orderly. And so by orderly, you're saying, what do I mean? Well, the short-term VIX, you're not even caught up to where you were versus the other VIX, which is where you are. So when we see this is not what you want to see. You want to see panic, fear, everybody screaming. You don't want to see everyone's like, tariffs. Like that in and of itself is kind of a problem for me. And it's definitely something that I want to pay attention to. Now, I do think that it's worth noting that when you look at the NASDAQ like this, from a trading standpoint, this is exactly what you want. You want it to completely implode and you want to watch it just fall apart and just shake out weak hands and then look through the names and find out what names are going to be the strongest. This is some of the greatest buying opportunities when this stuff happens. People just don't understand that they just need to step out of the way. If you're not a guy that likes to short or a girl that likes to short, just literally step out of the way and just avoid the drawdown and then just get back in the market once it starts to bottom or looks like it's going to form. Now, when that is always the guess, right? If you look here, you have a 12, a 22, and a 55. They're screaming down. We talked about the NDX breaking last week. And now you can see we're right through that 200. And I have a declining 55. So to me, again, all bets are off. What you do here is you understand that technically you're broken. And really what you need to do now is you need to put yourself in a position here where you allow it to work. When you get these declining 55s, you need to get over them. And you can see how we broke here, tried to get back over, couldn't, tried to get it back over, did, lifted, and this is where we are. So then the question is, what is this really telling us? Well, the one thing we did get today, which I do like, you want to see these extreme spikes in volume, and then you want to see them go away. So we started getting these extreme spikes, and they didn't go away. Now they got more extreme. And when you start seeing them get more extreme, you have to pay attention to that. So out of the things today that I did not like, I need to see that this is peak volume. And I certainly need to see that VIX on the short-term side starts catching up because that's telling me that this isn't done yet. And by the look of it, again, this is still way too orderly. I don't see the panic. And people are going to look at these charts and go, well, I see it. I see the panic. That's not panic. That's very, very orderly. 180 today is panic. This is just, we're being very orderly. We're taking our time. We're not in a big hurry. And candidly, if you want to own the stock, you love this kind of stuff. What you're always looking at, again, is just you're looking for points of reference. So here's your 55 with Tesla. and then you're watching this and go, okay, I'm 40% off. You start getting 50% off, you're 55. You start looking at this and going, okay, that's kind of pretty insane. It's very rare for you to see to the downside, you're 50% off. And that's going to put you right around that 180, 184 level, which is really where I think you're heading. I don't, maybe you get there tomorrow, maybe you don't. I don't know. Options are so expensive right now. You guys are all buying options and you're buying puts and you can't figure out why you're not making any money. It's the VIX. The implied volatility is absolutely crazy right now. So buying options is not the game. What you do is you wait for the VIX to turn and then you sell options. That's the game. You sell puts, you sell calls, because you're not going to make any money here. You're fighting the implied vol the whole time. It's funny, I was watching these. We actually did a trade on Tesla today, and one of the things off the open, I was hoping to go long, and then you could just tell it wasn't going to work. We had a couple trades that actually worked on the long side, and then I just got out of the way. I held them because I was trying to build positions and they just didn't work. But if you look at something like a Tesla, when this starts breaking down on just like a 5-minute chart, it becomes pretty clear. You have a little flag right there and you break. You don't have to get in right away. You can allow it to set up again, and you can see how this set up perfectly right here again to get in this trade. We did one short and then we did another, and our target on this was like, I think it was 223, 224. And at the time people were like, there's no way, but yeah, we got there clearly. And the reason for this is just because you can do measured moves to figure out where you would go. But you can do that based upon the volatility. The point I'm getting here is this is way too orderly. This is not how this is supposed to go. None of this is supposed to be this orderly. It's supposed to be way more panic, and it's just not. And you can even see it with some of these names where even NVIDIA, you hardly fell. I mean, people are like, well, it's down 4%. Well, the NASDAQ was down 4%. You're down, a beta of 1 on NVIDIA. So it's not really that sheer panic, and you're seeing it even in names like Meta, where Meta kind of held here. So, do you look at the ones that aren't breaking? Do you look at the ones that didn't hit new lows that kind of rallied? Maybe, but really what I'd be looking at are these resistance points, because that was the game all day today. If you used previous resistance points and previous support points, you were able to get in and out of these trades all day long. That's all you had to do is just watch these levels and just mark them, and then watch a 1-minute chart. And you'll see the retests of them, and then you just put those trades back on right in these areas. And you can just literally do it. If I get rid of this line, I'll show you. On days like today where you just have nothing but you have net sellers, you can just do it over and over again, literally all day long. And it doesn't matter the name. We did MSTR trade off the open, but then I did another one. I'll show you right here on the hourly. You just formed a bear flag, and then all you're doing is just watching the bear flag. You're watching the break, doing it into that. I actually did it here and let it at like 250, and then you're using these as your highs, and then you're getting out. But you're bouncing off these levels way too orderly for my taste for this to be an actual bottom. You need that absolute fear. These things go into levels people never thought were possible. You're not there yet. You're not. This is still way too orderly in my opinion. So I do think that, I've been saying that I think you're getting there, but it's technically, quite frankly, it's getting worse. It's not getting better. And tonight's news with Delta didn't help. If we go here and just look at the first trend line, you can obviously see the first trend line of the NDX right here, completely shattered and broken. Everyone's hopes and dreams. And then as this new low comes in from that, and you mark that kind of area right there, you can see the same thing again. Actually, you can just move that bad boy up just a little bit to here. You can see that again, and you kind of go from there. What does this look like now? It's gross. It's really disgusting. And you can just see the 200-day moving average right here, and you've sliced through it. So when you're through these moving averages, and like you look at the Qs, for example, and you're below that on the 200-day moving average, and you're below the SPY on the 200, and the XLK, XLC, XLF is pretty much left, right? You start hitting a point here where it's like, you have no leadership. So you don't go out there and try and stop it. What you do is you understand what's going on, and you realize that there's a bounce out there. It's coming. And that might not even be the end of the sell-off, but you have to work your way down on these trades. You can't, if you're shorting, you just can't leave them on. Someone's going to look at this and go, oh, all I had to do was short here and leave it on. Okay, let me know how that goes with any size. You're going to get torn up. You just are. It's not realistic to assume that you're just going to hold through like 70 or 80 point bounces. It's just not realistic. But when you see stuff like this, I would think that you're getting there. Now, maybe you are, maybe you're not. But when you look at it, It's sure not. It's sure not there. So what I tend to do with these are mark off my levels and then just use a couple other indicators. And then all I'm doing is just putting the shorts on, taking them off, putting them on, and then I'm allowing trailing stops to work and I'm trailing them down. And you can just literally pull money out of the market all day like this on these kinds of days when you have this trend identified. Here, take a look at this live. That's pretty nasty. You're buying a lot lower on Tesla. Let's make sure that closes. But if that closes like that, man, oh man, you're going lower. That's going to break. Short. You just use the top of that. It's going to cost me $2, but that's going to break. There's no doubt about it. The fact that you couldn't even bounce is pretty scary. Tesla new low a day, trimmed 238, I guess is possible here. You want to pull money out because you don't know what's coming. You don't know if someone's going to talk about tariffs and saying tariffs on, tariffs off. Like we just don't know. Trimmed a bunch of the Tesla short. The weakest of all the names, hands down, is Tesla. So if we really do break, people are looking this down 7%. See, like you're hitting that new low. What you're doing is just going out there and going, okay, trim. And you're doing it constantly. You're doing it over and over and over again. And the goal is that you get to a point where you're like, I don't care if I get stopped out of the rest of break even. That's the plan. There's another level down here. I think we can get to 224. If this gets ugly, this is not ugly, by the way. This is like still very, very orderly. You're trying very hard to hold that 238 here on Tesla. So like on that Tesla, I'm going to do that. You're not going straight down, guys. You're going to bounce. What you want to do is you want to watch that bounce and maybe you put stuff back on and go from there. Now, when I look at something like this for me, before we get into some breadth indicators here, but when I look at something like this for me, I have to look at this and say, is there any chance of this stopping? Maybe, but any kind of rally here, I'm probably going to want to still be net short these names. I am looking for the tail end of this, but I've been looking for the tail end of this for what? 3%, 4%, 6%, at least 6% now. Friday, I was pretty sure it wasn't the bottom. The reason that I felt that is because it's very rare that Friday is bottoms. If you look historically, the reason for that is because you had the most puts ever bought on Friday or last week, on Tuesday between the SPY and the Qs. So they closed those puts on Friday, which causes option market makers to actually have to go out in the market and buy stock. And that gives you a false lift, which is exactly what we saw. And then they just come in on Monday and they put the trade back on. And that's why the trade's so strong. So Friday, you may actually even see a rally. But you have a couple events this week. The real issue is the Fed going forward? Are they going to cut rates sooner than people think? I would say, depending upon what CPI reads like, you could see something like that. But for me, understanding this, let's just go through the breadth and go through some indicators. I think that's the best thing that we could do right now and say, okay, what is exactly going on? And then when you look at these, I'll tell you what's most troubling. I'm seeing it on the longer side, but I'm not seeing the washout on the shorter side. And this is pretty much the exact opposite of what you want to say. It is what it is, guys. I'm just going to tell you what it is. So, you're breaking here on the 200-day. And what this means to me is they're rotating. So in other words, you see how the 5 is staying right here? For those that don't follow along this, and I would suggest that you subscribe to this channel because we do link all this stuff together for the week. It's all free. But if you take a look at how this looks, this is the 200, this is the 50, this is the 20, and this is the 5. And why I have it set up this way so that you can actually just compare it. But when you have you're negatively sold down below the 50% line here on the 200 and on the 50, you tend to see these huge bounces, short covering like you did here, where the 5 went from 1% being at the 5 or to 99% or 90% being over the 5. And you can see this bounce up here, and it's actually a fairly decent move. It just doesn't really look like it on our chart. But if you look at a move like that, you'd say, all right, well, that's not, that's fairly decent. I'll take that right now. I'll take a 4% bounce. Anyone give their right arm for a 4% bounce if they're buried in longs right now. So you go, okay, well, I get that. What's happening here is the exact opposite. So my 200-day is getting worse. The 50 is getting worse. The 20 is standing in line. So what this tells me is that more and more stocks on the long end of the market are being sold. That coincides perfectly with how orderly it's being on the VIX. Meaning, this is why you're not seeing panic on the short-term VIX, is because they're actually selling the longer-term stuff that they've been in longer. And we can see that in the market. We're going to get to it. But that tells me that, there might be more pain coming before this ends. And then it leads into say, okay, well, you could look at the technical levels, and we'll do that. But once you're below the 200, all bets are off. And so for me to sit there and go, oh, look at this level, look at that level, it's kind of silly. This made me laugh because it just reminded me of when we used to trade in the 90s. These were huge opportunities for us. Like, we'd be foaming at the mouth over stuff like this. And you look at the S&P right now and where it's going to settle. Nobody knows, and nobody knows what this looks like in a month. I will tell you a couple things though, and I do think it's important. When you go back and you look at time, you go through the 90s. Bank of America had a great piece on this. You had corrections like this 10 times from 96 to 2000, 10 of them. From 96 to 2000 or 95 to 2000. So just picture every 6 months you're going through this. And all you had to do was consistently go out there, wait for the opportunity for them. It would flesh out, like it would take 1 to 3 months to flesh out. And then you'd go back in the market and buy. 1 to 3 months to flesh out and you go back. I mean, literally 10 times if you go back and look at the market. I think you're going to go through the same thing here where they puke everything out. And then something comes up and then everybody has to get back in. Puke it all out and then everyone's going to get back in. This is the volatility that you're supposed to have with the NASDAQ. This is the reason why you just would go out there and people would buy Procter & Gamble versus buying Tesla. Like if Tesla and Procter & Gamble have the same exact volatility, like literally if they just did, like why in the world would you want to go out there and buy Procter & Gamble? It would be silly. You did it because you wanted to make sure that if you needed the money in a month, it was there. If you were in Tesla, and it was swinging 50 points a day, you didn't know what you were going to get. So there was a reason for these kinds of companies, and that's like the Colgates of the world, and that sort of has gone away. You saw it today with, they're buying Philip Morris. So where am I going with this? My personal belief is the people here that are calling for the end of the world, I would just tell you that nobody knows what's going to happen. You are clearly setting up to go lower. And anyone that's looking at this chart, from my standpoint, would have to say, yeah, this looks disgusting. And that's the technical term. There's actually a technical term in the book called disgusting, and this is what it looks like. So what you want to do is go, okay, well, where could we go, Rocky? Like, where's that major level? Well, that takes you back to like March 24. It takes you back to September 24. It really takes you to this 450 level. You think you can't get there? You could be there tomorrow. And that's what I'm saying. When this happens, it can happen fast. Now, do I think it's going to happen that fast? I don't know. It's 3.5%. It would be like today again, and you'd be at a main level. Now, is the sky falling? Okay, let's walk through this. So Meta is down, and we're down about 150 points in 2 weeks. So if this continues, then Meta's a zero in about 8 weeks. So do you think that this is going to continue? If you look at Tesla today, and I know everyone has their own opinion on it, but if Tesla continues to drop like this, it has 5 days left in the market before it's a zero. So do you think that the selling is going to slow down, or do you think the selling is going to accelerate? The way this usually works is it accelerates, and then it's usually a day or an event that everyone thinks is going to be disgusting. And then what happens on that day? Oh, we buy, and we have no idea why. Now, it's something along the lines for those that don't remember, but if you go back, and we'll do it with the SPY. We can do it with we'll do it with the SPY. And if you go back and look at the SPY, everybody was puking out here because this was peak CPI. Everybody puked it out, and they couldn't get out fast enough. And I know everyone's going to tell me this time it's different. It's been different for the past 25 years I've been trading. Sarcasm. It's not different. So when everybody couldn't get out here, and then here you have your moving averages, and they look disgusting, and they're all pointing down, and we got to get out of the market, and it's gross. And what's this look like? It looks the same exact thing. So you could be coming into something Wednesday with CPI, completely puke, and then get a piercing pattern, and everybody's out of the market. You got rid of all the CTAs. They're all gone. You can go look that up yourself. I think Zero Hedge even has a piece on it tonight. But if you go and take a look at that kind of stuff and then look at the market, you just don't have leadership. So when it does bounce, this is going to take time. And it's going to be no different than something here like that happened on XLK. But if you go take a look at the SPX, and we'll do it that way. When this finally decided, like, oh, we're down, that's it, and then it rallies, and then it retests, and then it builds, this takes months. And that is the amazing part of this. Like, that is what's got me chomping at the bit here. JP Morgan, everybody loved JP Morgan at 280. They couldn't wait to get in. But at 230, nobody wants to own it. That's fine. I'll be there to pick up the pieces. I've gone through this too many times. You didn't want to own Goldman at like 680, 670, 680. Now you're looking at 530. Nobody wants to own it. It's been 10 days. And people say, well, things have changed. Things always change. And just understand that this thing with tariffs can go away in a day. The damage is done. Let's just call that what it is. The damage is done. So like something like Germany is not all of a sudden going to redo themselves and say, oh, they calmed down, so we're not going to go through with their defense bill. Like those outflows to Europe, that's done. They're going back. There's no doubt about it. But the idea that you just can't find an event that turns this around, I think is going to be silly. But if you look at these names, they're pretty broken. Now, there's two events that I think that we'd be remiss to not go over, in my opinion. And again, I really do think that, I want to be real clear about this. The way you broke technically, the way you closed, I would expect some kind of follow through out there before CPI, either tomorrow or maybe the day of CPI. You usually, when these names look like this and you're forming these Marubozu blacks, they usually don't end this way. The problem is between options and being short overnight, there's so much risk because all you have to do is just open flat and your option, or open up a third of this, your options are pretty much zeroed out. Then you're behind the eight ball with the short. So it's a very difficult spot to hold stuff overnight or to short overnight and hold, unless you're willing to take that kind of overnight risk. I've been around too long to do it. I just rather come in tomorrow and be fresh and not get hit with the, get hit with the kibosh. But I do want to go through these two things because these are two events that you should know for tomorrow. And I'd watch parts of this again just because there's a lot in here. And again, if you're going to watch this and say, I said we're falling, but then we're going to bounce, that's exactly what I said. But I did put the time frames in there, so you may want to listen to that again. I don't like that Delta is coming out and saying, hey, the consumer's weak. Delta cut their earnings tonight in half. It's not good. I've seen good before. It doesn't look like this. So when you see something like this, you really need to pay attention to it. This is something, just to FYI, at the time of recording this, I am short this. And I would think that airlines have a bad day tomorrow. It's not going to be just Delta. It's not like everyone's going to say, oh, I'm just going to fly America. Like, it's not going to work that way. They're all going to wind up coming in on that. Jets is the easiest way to short it and go from there. Oracle, I don't view this as a great quarter. I think it was an okay quarter. I don't know why it's up, maybe because they increased their dividend, but to me, that's like the worst thing in the world. Like, I don't care that you increased your dividend. I want you spending money and growing. Instead, they're saying we're going to give money back to shareholders. That's a net negative right now to me. So I'm not really crazy about what I saw on earnings after hours. I do think there's going to be huge opportunity when this dust settles. Some of these names to me, again, I'm chomping at the bit, but everybody knows the stool, and you have to watch that. You have to watch the what, the who, the when. When is technicals? There's nothing here to tell me that I have to be the first in line here. Like, nothing. So let's just let it all fall apart, let it burn, and then we'll just pick up the pieces. That's it.